Okay, it's Brent from TradeGuild.blogspot.com, February 27th, 2007. We were just looking at the spiders and 3C on an hourly time frame, and I was just saying that we had this relative level of price here. Eventually, we get a move up to this area, so we have a higher high, but in the indicator, it has really gone nowhere. So that is a negative relative divergence. You can see on this pullback, the indicator drops way below this previous pullback. So that's another negative implication there of that indicator. And then we get a higher high, higher than this high in this area. And again, we have that negative divergence. At this point, we're in gear as far as these two peaks go. So we have this highest high over here, but again, huge negative divergence. And this is what has led me to believe that we were going to see a significant correction not so far out. So the 1 hour, as you can see, can affect all the way up to, a month or more. So just because it's divergent doesn't mean it's going to move immediately. That's why we use the different time frames. Typically, I like to see at least 2 divergences like that, ideally 3. If we take a look at the next time frame that I use, which is the 5-minute, what we'll see here is, again, this is that high that we were looking at over here. This is that high, because we're looking at the 5-minute. And here you see the indicator at the highest on the screen. And as price kind of trades sideways, maybe a little upward bias there, you can see this indicator just keeps on going down, keeps on going down. So at this point, it moves into gear as far as these two peaks go, but it's still at a significant divergence. And ultimately, we get this, I think that would probably be the highest point of the move, maybe. And really, it's just totally negatively divergent. It's just sounding the alarms. And this is a 5-minute indicator, so it doesn't go on for months or anything like that, days, maybe a week or so. And subsequently, of course, we got the meltdown. I also look at a 1-minute time frame typically, and sometimes a tick. So here's the 1 minute, and what we're basically looking at with this 1 minute is pretty much just today over here. So you can see the indicator is moving down over here, kind of with price there. And if I zoom in a little bit, we'll take a little closer look here. And you can see around 2 o'clock, it starts making little higher highs as price continues to go down. So that's a positive relative divergence. Ultimately, it's down a little bit lower here, but compared to this valley and where price was, this is a very positive divergence, and it produced this move over here. So it's still in gear up here. This pullback is still in gear. So there's a potential that this could still produce another little pop or another little rally. How far that goes, we have no idea. We have to see more information as far as being on the 1 hour chart or even the 1 day. If we look at the tick information, you can see again, basically we get this low over here, and it starts moving up. Actually, at this point, it's in gear. We have a little lower low there. And then over here, it's moved up again, even though price has actually moved down. So at this point, the indicator is moving up, signaling a positive divergence, and it's clearing this whole area, making a new high there. And we see the beginning of a rally here on the tick. So maybe we're going to see a bounce tomorrow. Who knows? But this is very short-term information. This is like day trading stuff. Let's see. I want to show you a couple other things real quick. Why we have it up. Oh, let me just get rid of that. We had a MACD divergence. You can see in MACD over here. You can even see in the lines. So, that was negative as price was going up, so that wasn't good. And, like with these negative divergences, you see this goes on 6-7 months. So they can remain, irrational longer than you can keep your money. So just because you see a divergence. That's just part of the puzzle. What else do we have that I want to show you? I think TSV 55 is one of my favorite indicators for all you guys using Telechart, and that's down here in this window, and you can see basically it crossed below its moving average back here in December. That's when I started seeing stuff on 3C too, and you can see it's pretty much stayed below that moving average even though price has gone up. So you can look at this on the hourly time frame, the 5-minute time frame too, and it's very useful in my opinion. So let's move along. Let me see what I have for you next. The diamonds. So the diamonds, pretty much everything's pretty much the same. The negative divergences, all that. I just want to show you real quick a couple things on 3C. And let's take a look at the 1 minute here on the diamonds, which is the Dow Jones ETF. And you can see, boom, boom. Okay, so price from this level to this level has gone down. The indicator's gone sideways. Here we have the low of the day. The indicator's moved up. So this signaled, if you were day trading, you have 1, 2 divergences. Like I say, I like to see. This would signal that there's a change coming. So this is very predictive. And you see this little rally we got here, this little bump. And 3C basically is still in an area where it could continue to go up, or it may pull back, but right now it's not negatively divergent, let's say that. If we look at the tick information really quick, and I mean we're basically looking at about 3 o'clock or so here, so you have an idea of what we're seeing. You can see price of course is moving down. We're relatively flat there. That would be a positive divergence in and of itself. This move up higher above this level as price is going down, that's a very positive divergence. We have an actual higher pullback in the indicator as price makes a lower low, and another one. So, the setup is there for a possible bounce in the morning. This does not suggest anything beyond that because it's just tick time frame. If it was hourly time frame, we'd be looking at something different. The Qs, I don't even know if it's worth showing, but all the same information applies as far as MACD and all that. There's big nasty divergence. You can see it. As price has gone up, that 3C indicator has been signaling big nasty divergence. Here's the hourly time frame, and over here you can see we got the high of this move over here. And by the way, 3C was in gear with this move, but then you see this high that was attempted to be made, and at that point 3C is already moving down and it's negatively divergent. So if we take a look at the 5-minute time frame, again you can see that same kind of bias towards a possible bounce here. You see actually 2, that's a lower low, but over here where we have this pullback, you can see the indicators way up here. So a possible setup for a bounce tomorrow there. Here's the 1 minute time frame on the Qs, and here's where you see the predictive nature of this indicator. Okay, lower low, lower low. Here's the lower low in price over here, but the indicator makes a higher low. Over here it's almost even. It's a little bit lower than this previous one, but it's a lot higher than the 210, 215 low, and price has made a new low at that point. So the indicator's positively divergent. At this point it's 1, 2, 3, or 2, and there's the rally. So it did what it's supposed to do, and we got the pullback, which makes this in gear, and now it has moved up higher and it's pulled back again. So price is getting close to this 3 o'clock low, and this indicator is still pretty high up there. So the Qs, let's take a look at the tick real quick. The Qs certainly look like they could bounce. And again, this is that tick information here. We're looking at probably 3 o'clock somewhere over here or whatever, but price is moving down, as you know, and there's the low, there's the higher low, and there's another higher low, and presumably we're seeing the beginning of a possible little bump, let's call it. So that's going to be it for this video. I'm going to come back with one more. I'll see you in a minute.